We have, I would say, for about the last year and a half, been focused on trying to work with crypto asset focused managers. We're invested with a manager based in Texas, and have basically spent quite a bit of time trying to find our way into a seeding relationship and capital raising relationship with one of those managers. So we are always on the lookout. We have done quite a bit of work on behalf of Blockchain Capital, a venture capital fund based in San Francisco, helped them raise their last $150 million Fund 4, and continue to evolve in the space.
Hi everybody, my name is Nelson Chu. I'm the co-founder and CEO of Cadence, and our focus is on building the institutional investment platform, actually bring institutional liquidity into this space, which we think is going to be super important, to enable liquidity, trading, and all the things that we want with security tokens. And our focus on private credit was because there's just been a missing piece in terms of making private credit available to everybody. And so that's been our focus and our expertise in the space.
My name is Phil Piper. I'm the co-founder and CEO of a Swarm Fund. We are a blockchain that has security token framework. So we focused initially with the first iteration on actually tokenizing LP positions in funds to actually prove that all this vertical stack is working. And to answer your question, what we're doing to make this a reality, I think it's in two ends. One is actually to commoditize all the tools and give them to people to just trial how a security token offering best looks like, how to make it most compatible with regulation. And then the other end is obviously the reality will only come into play when big institutional investors actually engage, when there's a very high degree of confidence in these processes. So actually, how do you patch together the right players and the tools on the other end of the spectrum to make it a high confidence marketplace?
Thank you. So if we were to scroll through online media right this very moment, or even poll the audience, we'd quickly realize that the narrative surrounding the security tokens is extremely bullish. So I would love to kick off this discussion by asking a really high-level question, and that's, when we think of tokenized offerings, what pain points and problems are we really trying to solve? So Philip, you mentioned when we first met that you're in the process of, you tokenized LP positions in 9 funds, you have about 80 more on the way. So what value do you see in that? And maybe you can share some learnings from that experience and what you're seeing.
Yeah, I think we've seen throughout the day and part of the discussions that there's two parts of the pitch that you normally hear about security tokens. One is obviously the efficiency gain, that you can bring something in terms of capital faster with cheaper tools and deploy that in a more regulatory compliant way. But then the other part of the equation is actually liquidity, and everyone talks about liquidity, but the reality of the marketplace today is that this liquidity only exists in theory. So we see all these players that try to get the proper licensing, they try to pitch that they have a marketplace, but the reality is we haven't seen secondary trading really take place. So how do you navigate that in a good way is by really bringing that confidence, and it won't just happen, it won't just evolve, but you have to go out and actually convince institutional players. You have to be out and actually deliver industry-grade expected financial products that then want to be tokenized. So it's all about actually taking something that works in that stack and then bringing it into the world of actually real finance and not just into the retail world of the tokenized or crypto financing world.
Makes sense. And George, at Old City, what would you say from your discussions, what would you say are the prime targets, what asset classes rather are the prime targets for tokenization?
Well, I think Philip's comment about secondary markets and will they sort of come to fruition seems to be the key point here, right? I mean, the tools are certainly there technologically in terms of, you can see many providers out in the room outside providing KYC and AML and other types of sort of critical services in order to allow platforms to do security token offerings. But if really the key value that's being presented to investors is that there's going to be sort of liquidity in the aftermarket, one needs to sort of see the path to that happening. So we've spent quite a bit of time talking to potential clients who are interested in getting into the space and and evaluating projects. I mean, I would say ultimately, if you think about it, venture, private equity, there's a little bit of a challenge of, how do you find out what the NAV is, and all the rest of it. Obviously, that is a challenge. I would think we talked a little bit before. I would think real assets, buildings, real estate, things of that nature that are cash flowing, that can be underwritten in large part on the basis of financials and other kind of quantitative data. It would seem like those are the most likely areas where secondary trading could kind of take hold. So that's sort of where we're most sanguine on things, I would think.
Mm-hmm. And by the way, others feel free to chime in if you're dying to make a comment. Philip, you mentioned the point of liquidity, and that seems to be the most common theme or advantages in the securities token thesis today, is that we're able to inject liquidity in the traditionally illiquid asset classes. So Carlos, perhaps you can tell us a little bit more on that. And I look at you as the veteran in the space, first with Spice VC and Securitize, which is an end-to-end tokenization platform. You're asset class agnostic. So I'd love your thoughts on, real estate debt makes those asset classes make complete sense to me personally for tokenization. But what if we're talking about VC portfolios that have a time horizon of, let's say, 7 years, hedge funds? If you could speak to that, that would be great.
So VC is probably the most illiquid asset class out there. So you basically commit capital for 5 years to a number of calls, and you don't start getting any returns until like the 7th till the 10th year more, because that's the traditional challenge. I am an LP in 2 funds. I've been investing in startups, all my career. I own my own fund in Spain. And last year when we started the project of Spice VC, we had the vision like, why not bring liquidity to the VCs, right? Because of course the tier 1 VCs get away with the lack of liquidity, but everyone else, if the liquidity starts happening, will have to provide liquidity. Otherwise, LPs will just invest in the liquid asset, because liquidity doesn't mean that you have to sell, but that you can sell, right? And then when we were like thinking of this, actually Blockchain Capital tokenized their fund. I was like, wow, this is great. These guys, we really have the same vision. So we look at how they did it, and kind of looking at the holes in the model and the process and the technology is what led us to basically build the technology for tokenizing Spice VC, which then became Securitized. Now we've actually moved Blockchain Capital token to our platform, which is great. Their token was traded in non-security token exchanges in a non-legal way, not because of them, but because it got listed. So they pulled it out of those exchanges. Now they've reissued with our protocol, and it's going to be traded on properly regulated security token exchanges. So how much liquidity that's going to get, I don't know, but I can tell you they didn't have liquidity before when they were tokenized there. And then this is, as I said, some of them like the fact of liquidity because they're not afraid of it. They want to be transparent. They want to open up the capital formation. Brad and Bart from Blockchain Capital, they always joke that they got investors from any continent on their tokenized fund, including one guy from Alaska investing from a research station. That you will never, achieve that kind of capital formation with the traditional fundraising process with LPs. So it's not only about the liquidity; it's also about accessibility and democratizing the access of an asset class like VCs. And I believe that because liquidity will increase the amount of people investing in an asset class like VCs compared to now.
That makes sense. Thank you. And Nelson, I know that as part of Cadence, you guys are constantly in talks with institutions, and I know that some of it is highly confidential, but I think it would be very insightful for the audience, at least, and for me even, to hear about what is some of the feedback that you're receiving from some of the traditional players out there. What are the sentiments? How are they feeling about the space? If you could talk a little bit about that.
Sure, absolutely. And I think institutions are all looking at this space right now. It's fascinating for them, right? They're getting more involved in cryptocurrencies, and they realize that digital assets are far and away sort of the asset of the future that they want to be involved in. But the question is, like, to your point, all the frameworks that they're used to, right, are not there right now. And so it all sounds great in theory, but there's things like custody. Like, there's no real custody of a security token right now. That's super important for them, right? So they can handle cash, but they can't handle actual digitized security. They don't know what to do with it. when it comes to essentially upending the existing infrastructure around distributions. There's something called DTCC, which exists and has existed for years. And so to be able to say, okay, so we're going to get rid of all of that, and we're going to just use a smart contract to do that. There's a lot of things that need to get over as a mental hurdle and even a technological hurdle to be able to adopt these types of things. And so, I think liquidity is definitely there. I think institutions will be the ones to ultimately give that liquidity, but you need to have people on the other side to make a market, right? So that, for example, that investor in Alaska, if he wants to sell a share or something like that, it's going to be so small that it's difficult to find someone on the other side to take it, right? And so the bid-ask spread, which is normally what makes the market go, is going to be so wide that it's not going to be able to facilitate liquidity at a reasonable pace that we'd expect from a traditional market or even like the crypto markets. And so to be able to have someone on the other side, which exists today on the corporate bond market, exists today on stocks and equities, to make that market is going to be super important. So all these different pieces need to come together, and they for sure will in the coming year, 2 years, 3 years. But right now it's still very, very early for us to be able to completely say, this is all going to work the way they expect. And I think it's going to be a really interesting next few years for sure.
I think we're obsessed about liquidity because obviously that's a big promise, but there is another thing which people don't, necessarily search for it at the beginning, but then when you start talking to it, they understanding, which is the whole idea about the, eliminating the middleman on the trading side. So what people don't know is that you have exchange today like Nasdaq, which has brokers attached to it, which then they have the clearing houses that work with the central counterparty risk people to manage the risk of the settlement not happening until 3 days, and then talk to the transfer agents and registers with central depositories. There's a million people like there that actually get involved in actually moving one share from one investor to another investor. When you move everything to the blockchain, you basically collapse everything into 2 layers: the exchange, which are not going to disappear, and the transfer agent / register, which is going to be a protocol on the blockchain. And you actually, when you buy a share, you actually own it immediately, which is revolutionary. And that's what blockchain is about, right? Eliminating the middleman. And that's nothing to do with liquidity. That's more about the inefficiency of the capital markets today. If you look at the cap table of Facebook, you will see they only have 3,500 shareholders. A company that is worth like $800 billion. So obviously that's not true, right? But not even Facebook knows who the shareholders are, because all this data is spread around in different brokers, changes, and it's not reconciled by anyone. They can't figure out what the cap table is, or who the investors are, or how they're being treated their shares, or how they're going to do a proxy vote or issue dividends, which is crazy to think that this is the situation today in the 21st century, right? So these are the kind of things that have nothing to do with liquidity, but that the blockchain and the digitized securities will address as well.
Thank you. Oh, we have a little visitor here.
Fifth panelist.
I have no questions for panelist number 6, but so actually this is a nice segue. And Carlos, thank you for that comment. And Nelson, you mentioned all the pieces that need to come together. So maybe we can talk, kind of take a deeper dive and a more realistic view of what's really going on. There's a lot of conceptual talk about basically tokenization of everything. We're just going to tokenize the world, and the liquidity is just going to come out of thin air. And so when we think about the value chain, taking into context that some of it is going to be a behavioral shift, maybe we can talk, let's discuss who needs to be in that value chain, who are we still missing? What skill sets do we need, to really bring this to fruition and turn this into reality? I'm not sure who wants to jump on this. I feel like you seem...
Yeah, well, I think we can just report on what we've been experiencing in the last 6 months, and obviously we were trialing the first 6 months of the year, and sort of I think the attention that this market has been given brought a lot of other people to focus that this is a relevant market to focus on. Both from the institutional side as well as the service industry that is behind this. So I think there's a little bit of a patching together still to be done to make some of the components work in what we discussed earlier. So, custody being connected with real banks with a big balance sheet that can actually back up the custody, which is not traditionally something that you want to entrust a startup with. So it takes a little bit of time for mid-tier or sort of premium players to discover that market, to bring the workflows to bear. And then how do you tie that into real securitization infrastructure, which involves also regulatory compliant exchanges. You can't just take a crypto exchange from utility token perspective and then just say, I'm just going to trade security tokens. There's a lot of workflow to be figured out, both from investor qualification perspective, from the regulatory licensing perspective. And we see actually, especially in Europe, we see right now a lot of like regional, highly, high degree of interaction with local regulators, discussions of people that want to build that layer and that want to either extend existing financial exchanges into this world or take newly built ones that are specifically built around this use case and then sort of, be ready for it. So much of what T0 is trying to do in the United States, but obviously they have a lot of hurdles to overcome when it is with regards to actually convincing the regulator here to accept that. Then there's the whole thing around the service industry itself. So who actually, aside from building the tools, which Carlos and us are building in the same fashion, is like, who should use these tools to actually take a project from one step to the issuance, through the market proposal to actually then the launch itself. And that is different than an ICO advisor. Everyone that had something to say in the marketing space or whatever to say was an ICO advisor in the last 12 months. And those are not necessarily the same quality and pedigree of people that actually are more similar to investment banks that have been very experienced in actually taking projects through that entire process, both from due diligence to legal process and structuring to actually choosing the right tools technically and so forth. So I think we're going to see a lot of players either from the digital world morph into that world, or some really newly designed service companies that are going to come together on this. And I think there's a lot of players in the market that are already well underway to be going down that path, but it's necessary.
So I'm a big fan of a book which is fairly old that I read when I was much younger than now. It's called Crossing the Chasm. He's an author called Geoffrey Moore. He's a classic on innovation theory, and he talks about like the adoption curve for new technologies, right? And how at the beginning a new technology is adopted by the early adopters, the enthusiasts that like technology and like dig around with things. But to really cross to mainstream, you cannot just have a new technology. You need to give them the whole solution about how to make that work. So I think we're at this point in security tokens that, if you have a blockchain protocol, that's a very cool thing. But no one's actually going to use a blockchain protocol to issue a security token because there's another million things involved to actually make it happen, from the legal advice that you need, from broker services or investment banking services, to actually tools to do KYC, AML accreditation, to manage subscriptions and sign subscriptions online, to actually issuing the token, etc. So our approach is obviously we're not going to be what we do everyone, but we just want to make sure that when someone talks to us, we tell them, okay, don't worry, we have all this end-to-end service, which many of them are done by partners that are integrated in our workflow, and we have this Trello board that will tell you what are the 10 or 20 steps that you need to follow to make successfully issue a security token. And that's what customers like, because otherwise you will not be able to do it. Once the industry matures, then people will be able to cherry pick the pieces and do things themselves. But today, unless you give them the full service, it's almost impossible to get it done.
So, speaking of cherry picking, I spent 5 long, grueling years as a securities attorney at a large law firm doing securities offerings and public offerings. And obviously there you have, the public markets, you have a registration and a review process with the SEC, you have public equities and other public securities trading, and you have a whole infrastructure of, analysts and traders and everything else we all know that's out there that allows the markets, to function the way they do, for better or worse, but there are indications of value. I think, to the point of security token offerings and blockchain capital, for example, having such a wide, diverse sort of slate of investors, which is wonderful, and I think the technology is fantastic to take a private, what would otherwise be a closed private placement for family offices or high net worth investors or anybody else, and make it something that is effectively democratized and out there that people all over the world can participate in, with service providers and the requisite KYC and AML going on, is a fantastic thing. Then we were having a conversation, so this is sort of out there, but we were having a conversation at the office because we look at a lot of private placements and we're saying, well, this can happen, but how are people then in the aftermarket going to figure out what the value is of these things to trade them and for there to be liquidity? This very thoughtful guy who's a former client said, well, you know what, yes, that's going to happen. It's going to happen in some of the really good high quality stuff. But what's really going to happen down the line is there are going to be AI bots that are going to be out there, and they're going to be building portfolios for fractionalized real estate interests or other types of things that are out there that are tokenized assets that are going to be able to learn and create portfolios 4 people kind of one off. And that, I mean, we're early and it's hard, but it's interesting to think about because there will also be elements of blockchain technology that are built into that, right? Rules and underwriting information and everything else that is going to go into. We see portfolio construction going in that direction anyway, and I think the tokenization of a lot of assets is going to facilitate some really kind of a la carte. Now, whether that's so much better than, you know, having a couple of REITs and everything else is a different conversation for people more expert in investments, but I think it's sort of a key point to keep in mind.
So Rob is absolutely right. So one of the things we were thinking is we already have in our platform Blockchain Capital token, we have Spice VC token, we have now Science coming on board, and we have 22X. So we have a number of funds that have been already tokenized that they all use the same underlying protocol. So it's very easy for us to create a token that contains, you know, all those tokens. So we basically created a fund of funds token out of thin air. So like without having to actually talk to anyone, and then you can buy a token that buys you an LP interest in 5 underlying funds. Like if you were investing on a fund of funds. And those are the things that these derivative products, etc., that, you know, are super cool. Of course, this is not going to happen tomorrow, but that's the interesting thing of this, where this technology can take us, and the complexity of actually managing the compliance and the distributions and all these things, it gets eliminated by using, you know, smart contracts on the blockchain, which on a traditional way would be very complex to do.
I think just from our perspective, like at this point, the vision is there. I think technology is actually very much there. The reality is that needs to catch up to everything. And so from our perspective, we've always approached it that like a hybrid solution is probably best these days, right? And so you take the best parts of the blockchain that are there. And so Carlos was mentioning that perfect cap table, fantastic. Being able to facilitate distributions easily, awesome. But everything else that is sort of within the existing ecosystem, it takes banks a lot of time to actually get there, right? And so to be able to take off bits and pieces over time, at the end of the day, we all want the same thing. It's all going to be on chain. That's going to be fantastic. But until then, we'll take it step by step and do a very pragmatic, methodical approach to ultimately get to that end goal, which we all want.
I'm just going to add one thing. I think we all have the vision of the unbundling that then suddenly allows a lot more automated investment decisions to take place, either machine-driven or by investment managers that do like an order of magnitude of other decision makings. But the problem is actually information. How do we get there? So how do we incentivize the proper reporting to bring KPIs into the space? And that opens up another gap that we sort of left out at the beginning. Is like we're talking about like semi-public offerings at this point in time. You know, either they're really formally public or they're sort of in the realm of that. And so we as an industry, we really have to work hard to actually instill that trust. So trust is not just, you know, what is the legal reliability of the underlying asset and how to connect the token with the asset, but it's also what is this and how does it update the progress of the asset itself? How do you make voluntarily more transparent what the underlying asset is doing and possibly make that more machine interpretable, etc. To be honest, we as an industry haven't figured that out, but I think we're going to come to that conversation very quickly because that's what the regulator is concerned about. What's the transparency necessary to have the investor base actually be informed and to really have someone know what the underlying asset is doing and make the appropriate buying or selling decisions as a result of that.
So gentlemen, you sold me on the vision. I'm in. But how do we get there? So what would you say are the near-term challenges that we should really work through? What are the kinks? And maybe we should bring in some of the learnings from the past year and what we've seen in sort of this ICO Wild West. So how do we all how do we tie it all together? Because we can't just make this happen in a bubble, in a silo. We have to bring the traditional world with us. And how do we make this happen gradually? Wherever you want to.
So let me go first then. I think the first thing we need to do is to stop calling them security tokens and call them digital securities, because the word tokens scares the traditional investors, and this is not for the crypto people. The crypto people are used to a different type of assets, much higher liquidity, volatility, quick flipping back and selling, and things like that. That's not going to happen here. This is more for the traditional investors to feel comfortable investing on this asset class, and for that you have to give them comfort that the only thing you're doing is really digitizing their securities to provide a lot of these advantages and efficiencies that happen to be a technological blockchain that does this job very well. So I think that's very important in terms of education to the market. So education is hugely important. And the second thing is the actual liquidity, because these changes haven't launched. So for all these changes, and I talked to all of them, please launch, because that's what everyone is waiting until those things launch, and then people don't see how they work, and of course they will launch and it will not go well at the beginning until they mature, etc. This is gonna, the promise of liquidity will continue being a promise and not a reality, and that, slows down the growth of the market. So I think that to me those are the two main things that we need to do. And then the third one, which is not really a priority short term, but it will become a problem long term, is eventually we need to standardize things around certain areas. How do you manage ID and digital identity? How do you manage what is the compliance protocols?
You need standards for sure.
Well, but you don't need the standards today. So I'm very much against the standardize and build approach. For instance, the telcos do. I'm very much like the web approach of what the browsers have done, which has been phenomenal. We build, they build, we compete, and eventually one option gets standardized because it's a better technology and it's being used by more people. I think that's what this industry needs to be focusing, is not on creating a standard bodies, but actually getting technology developed and then standardizing it. So.
I'm not an expert on this, and I know we're short on time, so I'll go quickly. But I think credibility, obviously, and kudos to Carlos. I know that your platform has done some of the really quality offerings. I think we just need to be thoughtful about really the underlying investment merits of the offerings that are going on. There's a little bit, I think, as in any sort of situation of this nature, there's been a little euphoria coming after the ICOs, and I think a lot of folks are thinking, well, the ICOs did quite well, and now they read, and it looks like everybody is starting to think you need to do things the right way as a security token, and so that's going to be an easy way to make money too. And I think there are some, at least in our practice, when we've looked at things, we've seen projects that really don't sort of merit the capital that they're looking for. And so I think just kind of a measured approach, focusing on the right offerings and doing it in a thoughtful way is going to allow the industry to build credibility that's ultimately going to serve for the long term.
Yeah, I think it's really an education process, right? And so helping people understand what exactly they're buying into, because it's not the same as a cryptocurrency, it's not the same as a stock, it's not the same as any of that. There's a lot of different attributes to that. So focusing on assets that actually lend themselves well to tokenization. So there's obviously a lot of companies doing real estate, there's a lot of companies doing companies, and there's a lot of companies like ourselves doing private credit. And so there's a lot of other assets that honestly don't work that well to be tokenized, and it should sometimes stay illiquid. That is going to hopefully shake itself out to the point where only the ones that remain that are actually being securitized are the ones that should be ultimately.
So, three parts to this to the answer. One is actually just to patch some of the holes that still exist, and custody and institutional integration are two of those. The second point is then as a blueprint to actually make it work, which means not just to, like Lego pieces thrown in front of someone to say build your own house, but take it in a good way to the market, showing that it's actually fulfilling the expectations. And then a little bit of expansion of what you just said. We all have to make our own go-to-market decisions. I think it's not just the vertical of what is the asset class, but also what is the territory. Based on that territory and what we predict the money flows to be to go into those assets. How do we do the investor roadshows? How do we convince investors, institutional grade or retail investors, whatever the choice is, to take these things seriously and actually drive volume into these investments? Interestingly, we see at Swarm, it was initially more about fundraising and seemed and smelled more like crowdfunding. We're seeing actually much more right now these initiatives where they want to tokenize existing balance sheets or cap tables and want to just have a more flexible electronic version of that. So to your point about e-shares, it's the future of actually sort of taking something that already exists, maybe as an existing asset class, and then having a higher degree of flexibility to do something with that. So that's going to be quite exciting to see how that actually sort of drives new requirements, because these are existing players that have their own reporting structures that they have to fulfill, their own integrations, and they have the promise that to themselves that they want to fulfill with this to actually take it to new markets, to new investor types.
Thank you. Dan, do we have time, 2 more minutes for a final predictions question? Or?
We're the last one, right? So we can go on until we want.
Okay, 2 more minutes. I just wanted to wrap up with a final predictions question. Are we at an inflection point for securities token growth? What to expect in 2019? 30 seconds or less. Very quick.
I think we are very, 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 very early days. This is a nascent industry, which is a great place to be, personally for me, because every day you learn something new and you build something new. I think it's going to take 12 to 18 months for this to really take off, because some of the pieces are still not there, like the changes.
I'll call you in 18 months. I'll hold you to that, Carlos.
Yeah, I mean, I concur with that. I think just listening to the panels today, it does feel like the classic situation where we've gone through the euphoria, we're coming out, people are being a little bit more sensible about things and trying to build credibility for the industry and being thoughtful about the different types of asset classes that lend themselves well. I think institutions will start to come in the types of ways that, you know, for example, Nelson's business, and you'll see the momentum start to grow.
Yeah, I think you're going to see, there's been a lot of hype around this, right? And so everyone wanted to do a security token, and then they realized how complicated it actually is and how challenging it is, and so companies like all of ours can help facilitate that. But it will reach a point where I think by next year, you'll start to see real ones come up that are, you know, really good opportunities for investors to understand these are flagship assets that can do very well for them from a performance standpoint. And only then, at that point, you'll start to see it really pick up speed when really great examples of what a security token or a digital security should be will come to fruition.
I think it's great that the confetti cannons of ICOs have sort of gone away, and we're really working on what this industry on the financial side should be about, and so that noise going away gives a lot more focus on actually getting this right, and we can come through with these messages. The other thing that I want to convey is that, like, I was very surprised to see how much institutional pull there is at this point in time, which might not be that visible in the current conversation out there. Institutions take time. They have their own planning cycles. They have their budgeting cycles. They have their execution cycles. And what we're seeing, however, when we go out and talk to them, that they are driving that on their own initiative, and we don't have to tell them that this is important. So that's a very positive message I want to convey to everyone, that there's real work being done by institutions, and that is key because that's where the predominant money is going to come from. These are institutions that invest most of the money in these kind of asset classes.
Great. Well, thank you so much, gentlemen. It's been a pleasure. Thank you, Dan, for giving us an extra 5 minutes. Appreciate it. Thanks, everyone.
Thank you very much. Thank you, guys. Really appreciate all your perspectives. Thank you so much. Thank you very much. And Swarm, thank you for your sponsorship of the event. Thank you very much. Thank you very much.